marquee message. This is where the king dollar will meet its funeral march. This will be where the BRICS lay out all the different non-dollar payment methods. I think we're going to get a lot of momentum after October, where the dollar is going to be down below 50% on international payments. That's coming. And I think that as a result of this, the next several months, we're going to be over 3,000 in gold.
Gold and silver have always been valuable, and now they are gaining more attention as global tensions rise. The BRICS nations, Brazil, Russia, India, China, and South Africa, are looking for alternatives to the US dollar. They are focusing on gold and silver as stable options for trade and payments, aiming to create stronger financial systems. At their upcoming meeting, BRICS leaders will discuss plans to reduce reliance on the dollar. They are developing a new digital payment system called MBridge, which uses blockchain technology to make transactions faster and avoid traditional banking issues. This system could support trade between their countries, possibly backed by gold and silver. Financial analyst Willie has highlighted that Russia and China are building up gold reserves to strengthen their currencies. He also mentions that India and the UAE are exploring digital currencies like XRP alongside gold-backed systems for trade, especially in energy deals. The BRICS meeting could mark a turning point in global finance. If these nations push forward with using gold and new payment systems, it could reduce the dominance of the US dollar in international trade and drive up the value of gold and silver. Now, we'll show you the best clips of the latest interview, but first, hit the like button, smash the subscribe button, and turn on notifications so you do not miss out our daily videos. Enjoy the episode.
Like interpreting the wind. Okay, that's what I try to do once in a while. It was last August, we had a BRICS meeting in South Africa. They actually blocked President Xi of China and his delegation. They held him in a hotel. They did not want him at the BRICS meeting to talk about social scoring for bank account access. Okay, that's the BRICS. The BRICS did not want the Chinese to dictate bank policy for social credit. Okay, that was a year ago. Okay, that's a preface. Then in June, the Russians took control. What do they call it? They're hosting the BRICS meetings. So it was in St. Petersburg. So the St. Petersburg International Economic Forum, where they had 23 deals worth, 70 deals worth 23 billion. And contrast that with Davos. They had no deals, no contracts, no economic contracts, no nothing. That's not an economic forum. It's a banker forum. So St. Petersburg, Chris, they had some results. They announced an alpha test for MBridge. They announced enhancements for the MBridge protocol. They announced the unit, and they said that more development was going to be coming for the unit. And they said, look forward to the October meeting, where we're going to have more announcements, more developments, more revelations, and more specifics. In the meantime, Russia announced that XRP is going to be the official intermediary between all their central banks, financial institutions and banks, and all the other side, the merchants, and the ones that take payment for whatever product or service. So the Russians let it be known that XRP is going to be important to them. Now, I'm looking forward to Kazan in 2 weeks, because we have been conditioned. We have been warned that a lot of details are coming in Kazan. A lot of details on payment systems, different options to operate under MBridge, maybe a lot of specifics and details and perhaps enhancement for Bridge, which is a payment system and not a protocol. We're probably going to get more details about the digital ledger and its usage and some of the features and just some of the volume. We're probably going to get more data on dumping treasury bonds and buying gold, more volume. We're probably going to get more details about the BRICS development, the new development bank, NDB they're calling it. We may get more details about how they're going to fund the new development bank. Okay, these are all areas that I'm going to be devoting attention to. And, you know, when this meeting is over, I'm going to need to do my chapter on the BRICS for the October report. And that's what I did back in June. Except back in June, it was like the 15th to the 17th. This is later in the month, so it's going to be a little more difficult to get a lot of information that's specific and confirmed about the BRICS meeting. I think this is going to be a big splash, okay? And what I'm hearing, you know, just like in a marquee message, this is where the king dollar will meet its funeral march. This will be where the BRICS lay out all the different non-dollar payment methods. I think we're going to get a lot of momentum after October, where the dollar is going to be down below 50% on international payments. That's coming.
In today's news recap, how high can gold and silver rally? Gold's record-breaking rally continues, and following another shallow mid-month correction that saw buyers return ahead of $2,600, spot bullion has returned to trade just below the $2,685 record reached last month. The precious metal market has witnessed an unprecedented strong uptrend this past year, with gold and silver both trading up close to 40%, with only minor corrections seen during this extended rally, a sign of strong underlying momentum and FOMO, fear of missing out, of a rally that at this point shows little signs of ending. Since hitting a cycle low last October, the gold rally has, as per the 3 attempted trend lines, continued to accelerate, highlighting the level of FOMO and fundamental support the metal has and continues to enjoy. In the short term, traders will be watching incoming U.S. data to see whether support remains strong enough for the metal to reach another fresh record, the 6th this year. The bullish drivers throughout this period are numerous, with the most important being the risk of fiscal instability, safe haven appeal, geopolitical tensions, de-dollarization, uncertainties surrounding the U.S. presidential election, and now also rate cuts, not just by the Fed, but by other central banks as well, reducing the cost of holding non-interest paying investments in gold and silver. The latter potentially supports increased demand for gold-backed ETFs from underinvested asset managers, especially in the West, who up until May had been net sellers since the FOMC began its aggressive rate hikes in 2022. The sustained demand for investment metals during this time has, for now, triggered a breakdown in the normal inverse correlation between gold and the dollar. The latest example is the lack of a negative reaction in gold to the 2.5% gain in the Bloomberg Dollar Index since the beginning of September, a period that has seen the timing, speed, and depth of future U.S. rate cuts pared back amid continued strength in U.S. economic data. However, with inflation increasingly getting under control and in some countries and regions falling back below 2%, the prospect of further rate cuts remains. This week, a poll among delegates from around the world attending the London Bullion Market Association's annual gathering predicted higher prices in a year's time for gold, silver, platinum, and palladium. While gold is expected to climb around 10% to $2,917.40 an ounce by late October next year, delegates held a very strong view on silver, seeing it gain more than 40% to reach $45 an ounce, with experts noting that industrial demand continues to drive market deficits as mine supply struggles to keep pace. Now we'll show you the best clips of the latest interview, but first, hit the like button, smash the subscribe button, and turn on notifications so you do not miss out our daily videos. Enjoy the episode.
They're lying about the job market and they're lying about the economy. Let me back those three statements up. Let me back them up. We have all kinds of different components within the economy that are going up by 6 to 10%. So to claim that the overall is 3% is poppycock nonsense horseshit. We got a labor market that they claim is like 3 or 4%. I don't know what their nonsensical number is. But notice that they say that the participation rate is like 72%. Therefore, one minus that, the unemployment rate is 28%. And of course, you got some people who are vaccine injured and they can't work anymore. So they're not unemployed. They're more like crippled, disabled. So maybe we need an unemployment rate and a disabled rate so that we can understand what the true participation rate is. And whatever comes out of Powell's mouth is pure nonsense bullshit. The economy is not growing at a solid rate. The economy is like at -4 or 5% because that's the lie on the consumer price index. We've been stuck ever since the lockdown in mid-2021. We've been stuck in an inflationary depression. It was like a -7% recession the first year with 15% CPI. Then the next year it might have been 13% CPI and maybe a -4% depression. And I think we haven't gotten out of the depression. And anyone who thinks that we're on the edge of a recession, you're a fucking moron. You buy and swallow the bullshit CPI, you buy and swallow the bullshit labor market data, you buy and swallow the bullshit economic data issued by the US government that's trying to engineer a bond rally in the midst of a $35 trillion deficit, debt, with a new 1 trillion deficit every 92 or 3 days. Here's the other moronic bullshit coming out of Wall Street. We got 1 trillion every 100 days for deficit. And they say, well, that makes for a $2.5 trillion annual deficit. So I guess there are only 250 days in a year. They revised the yearly calendar, Chris. No, we got a $3.5 trillion deficit expected because the last I checked, and I double check it every once in a while when I flip the calendar, we have a 365-day year, not a 250-day year. So you morons out there who think that we're only getting a $2.5 trillion deficit, you better screw your head on because you're probably a dumbass fascist damn. A lot of information of meat on the bones. We got the bones. In June, we had alpha testing and enhancement of MBridge. And MBridge is to make it faster, cheaper, and without sanction interference. Faster, cheaper, without sanction interference. The response to the weaponization of the dollar. They have been saying now for 3 months that in Kazan, we're going to give you more details, meat on the bones for these various options. And as I said, a marquee. These are the details for the dollar funeral march. And I think we're going to see an acceleration down for dollar usage and trade payment. Now, remember, the BRICS are developing very serious critical mass. And what they need to do now is develop the integrity and reliability of their systems. Now, that's why they're doing alpha tests. And I heard that they hired German financial engineers, Germans. They hired them. This is something that the East is not good at, banking. Banking channels and cables and networks and interoperability. And wow, the West is really good, and we've corrupted it. So the BRICS have hired German financial engineers. And who do you suppose is doing the alpha testing? Okay, they're doing, this is live testing. We're going to get results of alpha testing, results of enhancements, and a lot more news. I call meat on the bones. We got the bones in June, and this is going to be, I think, rather exciting, because if they do get their act together, if they do get the various vehicles working and tested and announced with details, you're going to see a big acceleration in these nations building their gold reserves. And I think that as a result of this, the next several months, we're going to be over 3,000 in gold.
What do you think of Jim's take? Do you agree with him? Do you think the silver cartel will push silver price to the moon and beyond? Or do you think this is just nonsense? Post in the comments section down below your honest opinion and share with the stackers your plan if BRICS takes over. Thanks for watching. Now watch this video right here because it's a perfect fit for you. I'll see you on the other side.